All right, welcome to part 3 in our 4-3 Work Together series, where we will be completing our balance sheet. With the balance sheet, remember that it is on a specific day, so this is just based off of December 31st of the current year. And so what we're going to need to do is grab our information from our adjusted trial balance to start with our asset section. So we're starting with our current assets. Remember, current assets are everything that would be used up within a year. So we just head over to our uh, adjusted trial balance and we grab our amounts for essentially all of our current assets. So these amounts right here. So when we start with cash, we had 36,460 and 79 cents. Oops, typed that in wrong. 460. Our petty cash amount was 300. Remember, with accounts receivable, we're going to have our amount, and then we also have our allowance for uncollectible accounts. So we'll have to do a little bit of math here. Our accounts receivable value was $23,018.95, and then our uncollectible accounts balance was $2,101.23. So that means that our balance in our accounts receivable account would be the difference between those two. So that would be $20,917.72. And then we keep going with our merchandise inventory. Again, we're taking merchandise inventory, kitchen and bath, supplies, and prepaid insurance. So merchandise inventory for kitchen is $147,084.62. For bath, it's $97,671.31. Supplies are at $19.50, and prepaid insurance is $2,500. So in order to find our total current assets, we're going to take all of the ones in the second column. Remember that this 20,000 is already the correct balance of these two. So we're just taking everything in the second column. When we total that, our total current assets add up to $884.44. Then we're going to come to our plant assets section. Remember, plant assets are long-term assets, meaning we're going to hang on to them for a number of years. So with our plant assets, we have accumulated depreciation associated with each one of those. So when we look at our adjusted trial balance, we have office equipment and its accumulated depreciation, our store equipment, and our accumulated depreciation. So we're going to need both of those four amounts in order to find our book values. So our office equipment was $26,015.89, and its accumulated depreciation was $18,674. So the difference between those two numbers is the book value of our office equipment, which is $7,341.89. And then we're going to get our store equipment. So we get our store equipment value and the accumulated depreciation. Store equipment was $51,852.82, and its accumulated depreciation was $36,255. So the difference between those two is going to be our book value of our plant assets. So that's $15,597.82. And then those two book values of our plant assets are going to be our total for our plant assets. So we're going to add those two together. We end up with $22,939.71. The total of our current assets and our plant assets added together is going to be our total assets in our balance sheet. So we have $329,824.15. With our percentages, all we're doing is it says we're taking our percentage of our assets. So notice that our total assets down here would be 100%. Oops. 100.0. And then we take our plant assets, 22,000, and divide by our total assets, and we get 7.0. And then we take 306 divided by 329, and we get our percentage for current assets, which is 93.0. Okay, and so our asset section of our balance sheet is complete. We'll scroll down here to do our current liabilities. So we're going to go through, grab all of our liabilities. Of course, these are also all coming from our adjusted trial balance. So you can see where we start with our payables. Our payables are here all the way down to dividends payable. So we're essentially just grabbing all of these numbers. So our accounts payable starts off at $24,116.31. Sales tax is $4,925.59. Employee income tax payable is $1,335.44. Income tax for the state is $956.99. Social Security is $2,376.90. Medicare is $553.24. Medical insurance is $846.42. Retirement is $571.94. FUTA is $16.72. SUTA is $112.08. Federal income tax payable is $2,749.15. And our dividends payable is $4,000. So remember, these are all things that we're going to have to pay within the current year in order to keep everything up to date. It doesn't appear that we have any long-term liabilities like notes payable or anything. So our total liabilities is actually just going to be the total of all of our current ones. So our total liabilities actually end up to be $42,560.78. So remember that the balance sheet, it's our assets that equal our liabilities and our stockholders' equity. So we're going to need to grab our information for our stockholders' equity. This is going to come from our stockholders' equity statement that we just made. So we need to go back up here and change to our statement of stockholders' equity, where we will get the information for our total capital stock and our total retained earnings. So these two numbers, the $75,000 and the $212,000, are the ones that we're going to need in order to figure out what our total stockholders' equity is. I just got to update these or they're going to time out here. So when we come back to our balance sheet, our capital stock value again was $75,000. Our retained earning value was $212,263.37. And so our total stockholders' equity, again, you could get this from your sheet. You'd have to do it up here, or you could just add them together. It ends up being $287,263.37. So now that we have our total stockholders' equity, we add that to our total liabilities. And we end up with $329,824.15. Remember that this number, total liabilities and stockholders' equity, should be the same number as our assets. If it is not, that means that you have an error somewhere. Luckily for us, everything looks good, so we're okay. The last thing that we need to do is do our values for our stockholders' equity and liabilities. So total stockholders' equity and liabilities would obviously be the 100.0. And then we take our stockholders' equity, which is 287, and we divide that by 329, and we get 87.1. And then we do the same for our total liabilities, which is 42,000, divide by the 329, and we end up getting 12.9. So that is our completed balance sheet for our departmental merchandising company of Foley's. So you can head on over to our last video, which is 4.4, where we will be putting together our statement of cash flows.